Hey, it's Zeb. Bitcoin has been one of the best performing assets of this century. Over the last decade, it's basically been up only. But as Bitcoin's price and fame have soared, so have the risks. If you hold Bitcoin, these are threats you simply can't ignore. Let's break down the top dangers facing Bitcoin right now, and how they could shake up the market. First, up leverage. This is the classic risk that's been turbocharged in this cycle. People now use Bitcoin as collateral to borrow in both centralized and decentralized finance. Since 2021, Bitcoin-backed loans have exploded. Coinbase, Zappo Bank, Strike, and Cantor Fitzgerald, all in the lending game, sometimes with billion-dollar limits. On the DeFi side, over 166,000 BTC are now locked as collateral, thanks to easier access to wrapped Bitcoin. Here's the problem. Leverage is rocket fuel on the way up, but dynamite on the way down. One big shock could trigger mass liquidations, especially for smaller investors who borrowed against their Bitcoin. Once forced selling starts, even institutions could get swept up, putting even more downward pressure on the price. And honestly, nobody really knows how deep it could go. Risk number 2, concentration. Oddly, the bigger threat might not be centralization in centralized finance, but in DeFi. It's possible we'll see 1 million BTC wrapped by the end of this cycle. If a major DeFi protocol gets hacked, billions in wrapped Bitcoin could be at risk, causing liquidations across the board. Most wrapped BTC is centralized and can be frozen, which is a blessing and a curse. Meanwhile, big treasury companies like Strategy are issuing debt just to buy more Bitcoin. According to their April 2025 SEC filing, they might have to sell Bitcoin to cover their debts. If the dominoes start falling and these big players are forced to sell, the price could unwind hard and fast. Third, politicization. Trump media recently raised $2.5 billion to buy Bitcoin, launched a meme coin, NFTs, and even plans for a DeFi platform. That puts Bitcoin straight into the political spotlight. Trump's executive order to create a strategic Bitcoin reserve? Some say it's self-serving. If Bitcoin gets labeled Trump's coin, expect political pushback. Other countries could retaliate. Germany dumped 50,000 BTC last summer. China sits on around 200,000 BTC. If tensions rise, they could dump too, hammering the price. Imagine 4 times what Germany sold all at once. That could trigger a cascade of liquidations. Fourth, risk mining concentration. Trump once said all remaining Bitcoin should be mined in the US, and now US miners control close to 1/3 of the network. If big players or the government can coordinate those miners, they might influence the blockchain. BlackRock owns chunks of many mining companies and can even pick which Bitcoin fork its ETF follows. Plus, US miners rely heavily on Chinese hardware. If tariffs ramp up, miners could face shortages, forcing them to sell BTC to survive. Short term, that's bearish for price. Long term, maybe it's good for decentralization. Number 5, quantum computing. This one's futuristic, but don't sleep on it. Quantum tech is accelerating, and if it cracks Bitcoin's encryption, millions of coins, especially old ones, could be stolen. The community might need a hard fork to freeze or destroy compromised coins, but that sets a risky precedent. Just talking about it could rattle investor confidence. It's not if, but when. Final risk, the macro backdrop. Sometimes Bitcoin acts like digital gold, sometimes it swings with tech stocks. The biggest danger? If Bitcoin fails to become a true safe haven and just tracks high-risk tech. In a choppy world market, that could drag BTC down. But if Bitcoin can prove itself as a neutral, self-custodied digital asset, it could become the safe haven the world needs. Maybe countries will start mining BTC themselves, not just for money, but for digital neutrality. What happens next depends on how these risks play out, and how the Bitcoin community responds. If you found this breakdown useful, don't forget to subscribe to Zeb Analyst and check out my other deep dives. This is Zeb, signing off. Thanks for watching, and I'll see you in the next one.